G'day everyone and welcome back to another episode of the Aussie Investing Machine. Thank you so much for joining me. In this episode, I wanted to talk about the commodity market and some opportunities that are upcoming. In particular, I wanted to talk about iron ore, coal and oil. We know that Australia has significant reserves of these commodities. There are also some highly profitable companies on the ASX which take advantage of our great position we've got with natural resources. Recently, we've seen some pretty drastic price movement across iron ore, coal and oil. And of course, where there's price movement, there is certainly some opportunity. The commodity markets have cycles. They go up and down over time. Making an investment at the right point in a cycle can lead to some pretty magnificent returns. And before we get started, I just wanted to say that this is not financial advice, and before making any investment decisions, you should consult a licensed financial advisor. Currently, we are seeing the following trends in the commodity markets: a significant downtrend in iron ore, momentum building for coal, and a peak arriving for oil. We can observe these price movements by looking at commodity prices, and one great website for doing this is marketindex.com. Ultimately, the movement of commodity prices affect stock prices of companies that are involved in dealing with these commodities, whether that's buying and selling or digging them out of the ground. Making a purchase at the bottom of a cycle and selling at the peak, even though this is a long-term investment, can yield some pretty terrific returns. In this episode, I wanted to cover coal, and then we'll do iron ore in a future episode. If you'd like to see a separate video on oil, make sure you leave a comment below. Coal is seen by many as a dying industry. Many countries globally are aiming for net zero emissions by as early as 2050. Eliminating the use of coal, especially in energy production, will be key for these countries looking to reduce their emissions. However, coal does have different purposes. Yes, it can be used for generating energy, but it's also used in the process of making steel. The type of coal used for steel making is metallurgical coal. When burnt, it generates very high temperatures, which allows the melting of iron ore. This is a process which is not easily replicated using renewable energy. And in fact, it's a very rare phenomenon across the globe. Not only is it a very new technology, but it is also extremely expensive to implement. So in general, I make the following observations in regards to coal. I think developing countries will still rely on coal for many years to come, as the barrier for entry into the renewable market is very expensive. That is true for developing countries in terms of their energy generation, but even countries that are developed will still rely on coal for the purpose we just spoke about, making steel. Steel manufacturers around the world simply don't have the infrastructure developed in order to use renewables for melting iron ore. So given these observations, in my opinion, it's no surprise that we're seeing the coal price spike at the moment. Markets for thermal coal, the type of coal used for energy generation, are booming around the world. As the world recovers from the pandemic, demand for energy is surging. Metallurgical coal is also seeing massive price increases as industrial activity resumes. There's no doubt in the long term, coal is in decline. However, in the short and medium term, there is plenty of demand. Coal may definitely seem like an unattractive investment to many. However, investors that can look a little bit deeper into the macroeconomic movements may benefit in the short term. It's worth having a look at some of the ASX biggest coal miners and see how their performance has been going. At the time of making this video, coal is up 270% for the year. Yancoal is the largest ASX coal producer ranked by market cap. The company is up from a $2 low now up to $3. That's a 50% increase so far this year. Whitehaven Coal is the second largest coal-focused producer on the ASX. They're doing even better with a price jump from $1.20 to $3.30. That's a 170% increase. Third in line is New Hope. They're up over 100% this year from $1.20 to $2.40. So all these companies have had a great run so far. If you'd had the foresight to purchase any of these companies at the bottom of the dip, you'd be in a pretty good position at the moment. So the key question is, will this run continue for these companies? We know the coal price continues to go up. Certainly the gains compared to the raw commodity gains are not quite as extreme. So there may yet be more upward price movement for these companies. If the coal price can hold, we may see further gains. However, maybe the horse has already bolted and these companies have gone up as much as they will. Personally, my focus is on iron ore, which is still in a free fall. Stay tuned for the next episode where we'll talk about iron ore and the companies impacted. Anyway, I'd love to know your thoughts on the short to medium term futures for these coal mining companies. Do you think they're worthy of investment? Let me know in the comments below. I'd love to hear your thoughts and opinions. That's all from me for today. Thank you so much for watching, and make sure to like the video if you learned something and subscribe to the channel for more content. Cheers.